Good morning. It's UPB, OptionMillionaires.com. A couple hours before the market's going to open on a Thursday, September 18th, 2014. And we mourn you, bears. We mourn you. The same bears who've been shorting this market for, going on almost 6 years, continue to short it. Average up with their fake money these days. I don't know what they're trading with. Anyone shorting this market since the lows in 2009. And making money is either lying to you or not trading at all. So you figure it out. Nonetheless, I was talking about this S&P 500 futures. On Tuesday, we had that big move up. I was talking about this in my video yesterday, this beautiful bull flag, and here we are at higher prices. If you look back again, this is, hey, I was short the market heading out of March 2009 into 2010 on the rips because I thought this market was going to continue to the downside. But yeah, the trend has been your friend over the last, certainly over the last 2.5 years when we had the Abenomics low, and this trend line continues to show support. And here we are. We didn't even get down to the trend line here after the August 7th move to the upside and the recent record highs. And to me, it looks like that's going to get taken out. We're just going to continue up, barring any kind of black swan event, something we don't know about. But again, headwinds have actually catapulted the stock market even higher. So, so let's just embrace it. I keep saying in my videos, it's like, hey, you know what? Everybody so just wants to call. Oh, it's the Alibaba top. Why call it top? Embrace the rally. Everyone's so pissed off. You know who's pissed off? You know when you're pissed off. You know when you're complaining and whining when you're not making money. That's what. If everybody was making money, everybody would be like, hey, this kind of doesn't feel right, but ooh, I'm happy. The wife's happy. Everybody's happy. When you're not making money, you're on Twitter going, ooh, this sucks. Oh, the Federal Reserve is awful. Anybody who's complaining is short this market, and anybody who's continually shorting this market, doesn't believe in this rally, is losing their rear end. Let's look at a stock that really, to me, looks poised in this unbelievable market for many to rally to at least a gap fill here. And I've been talking about this for a while. We're starting to get that move in Whole Foods. Guess what? It's the same thing that we've seen with this market where it just rallies for absolutely no reason. Yeah. Whole Foods, when you see a rally for no reason, you have to assume somewhere under the surface of that rally, somebody knows something, because actions, or in this case, money, speaks a lot louder than words. You don't see an upgrade or anything, but the money is pushing the stock up to that $40 level. This morning, about 2.5 hours here before the bell, Whole Foods is at, it looks like it's going to open a couple points higher, but nothing too drastic. So there's still a chance to get in. I was talking about this one, a comparable trade that I think this is going to equate to would be U.S. Steel. And U.S. Steel is a stock I've been talking about for a while. It broke, see this support resistance level. Once it broke this level, and I was talking about U.S. Steel back at in April and May of this year as being the possible trade of 2014, the stock to own. And yeah, it's getting owned. Actually, another analyst upgrade this morning. So it's pretty amazing down here in the 20s. You don't see the analysts upgrading the stock to 60, 70 bucks. No, it happens after the big move. After the big move. Just like Apple, when it was at its lows, you see all the analysts talking down the stock, then it hits record highs, and everybody talks up the stock. So it pays to be in before the big move. With Whole Foods, that big move is coming. It's coming. We're already in the cusp of it. I was even talking about this yesterday. The last time we saw a move like this, we're in the second day of it. We moved up to almost $43 a share. So even if we're just getting a short-term bump, that's going to bring us up to here. I think that rally is going to continue. We're going to fill this gap, and it's going to be a long-term recovery story. Much in the likes of Big Lots. Look at Big Lots, almost $47. My goodness, at the start of this year. See the support line I was talking about, and this little zone, and I would pull back in a longer-term chart. But nonetheless, I brought that up as well. I say nonetheless a lot. Some people talk about hey, yo, like this chart looks like great. Like, buy this thing, man. Like I was going, I don't know. I say nonetheless a lot. So just, kind of, nonetheless, just kind of erase that from your mind. It's just it's a filler. So look at Big Lots. Big Lots has been on fire. Right up to $47.50. I was talking about this one. It's $27, $28. So it's up significantly this year. I see a similar move with Whole Foods. And we saw a similar move earlier this year as well with U.S. Steel. So we're in the early stages. And it's much, when Whole Foods is down here, the analysts aren't going, hey, this is a $50, $60, $70 stock. No, they're doing that when it's a $50 stock. They're saying it's a $60. And when it's a $60, they're saying it's a $70. So it pays to be in before the move. That's Whole Foods. Let's look at some other stocks. Again, I'm in some Priceline calls. Priceline looked like it was going to come down to 1110 support. It didn't. Look at this. A nice bounce over oversold conditions here, short term. This is 9-month daily. And let's look at the stock to get back up. Maybe a rally that we saw back in the end of May, start of June, the end of January, start of February. We can get that kind of move up. And when those moves happen, they're fast and furious. Let's look at Google, which is starting to really start to get going. We got above the trend line yesterday, and we're ready to break out. If you look, again, I bring this up, the 5-year chart looks really uber bullish to me because we have that cup and a beautiful handle. I mean, take the drawings out, and that's just, look at that. It's a cup and a handle. Plenty of place to put some liquid in there, hopefully with a little alcohol. And then you have the handle to hold on to it. And then once you drink it, you're going higher. And that's what I look at Google. I know Starbucks had a similar pattern. A lot of people talking negatively about it, including Barron's. To me, it has somewhat of a similar pattern here. We have this consolidation from record levels, and I think Starbucks is heading over 80. I know it's crazy. There's not a lot of people who are calling for it. They're actually looking for more downside because they're comparing the weakness we've seen recently with McDonald's and equating that to weakness with Starbucks. Hey, what do I know? I'm not crazy. And how about Yahoo? We have the supposed Alibaba top. Today, Alibaba. We have Alibaba, which is going to make volatile trade here for Yahoo. Of course, if you look at where Alibaba is valued at, and then you look at the stake that Yahoo has in the company, and then you add in the fact that Yahoo actually does other things beside own Alibaba stock, we could see continued upside here for the name. But it's a beautiful breakout. It's classic here, right? This is just a real bullish pattern to the upside once we hit our multi-year highs, because Yahoo was another tech bubble stock. Hello, I'm a tech bubble. Yeah, so we're in a bubble here, right? Now that's a bubble. That's a bubble. And it got pierced, and we came back. We came to our senses, and we're starting to move back to the upside in a methodical, more slow, and not a bubble like. Look at it. That's a bubble. Hello, bubble. U.S. Steel. That's a bubble. Hello, bubble. Hi. We got the Moss and the Mons and the Potts, all of the commodities-based those fertilizer stocks. Those were all bubble-issues. I do remember, though, I remember clearly to the day, hey, you know what? Jim Cramer runs a TV show, and he's got to get his viewers in. But I remember him saying, oh, bye. Moss, this is great. I remember looking at the Yahoo message boards. Yeah, I just bought Moss at $140 a share. It's $150. I love this trade. I remember Citigroup saying it was a $200 stock. And then 4 or 5 months later, it's, wow. Whew. Anyway, yeah. And a stock to me that epitomizes this marketplace and tells you we're not in a bubble is a stock like FedEx. Look at FedEx. Is this a bubble? A nice methodical move to the upside on a company that's been around for, gosh, longer than a lot of you have been alive. Posting nice earnings, and I know somebody posted, there's always a negative, something negative comes out of earnings. They're like, well, because you weren't in on that trade and you're expected to go to the downside. You're like, well, 15 cents of the recent earnings per share was all due to buybacks. Well, guess what? That's what I've been talking about. JB's been talking about in the Option Millionaires chat room for years now. There's less, it's very simple right now. Supply and demand. There's less stock. I think something like 20% less stock than back in 2000. And there's more money out there. Supply and demand. Companies are utilizing cheap debt to buy back stock. Ride it. Ride the wave. Embrace it. Embrace the rally. Look at this. We're continuing to the upside. We're on the next leg here. Look at this consolidation. Boom. We're going to hit new record highs here for the SPY. And the shorts will continue to be wrong and confounded. Hey, I was a short. It's not too late to change. It's not too late to come to the winning team. Okay? It's one thing to be wrong once or twice. It's another thing to be wrong every single... we're already married. Let's be right at something. All right. UPB here. I'll see you in the chat room at optionmillionaires.com. Goodbye.